Hello and welcome to CMC Markets Weekly Trading Outlook for the week of March the 9th, 2015. My name is Colin Szynski, Chief Market Strategist. This week we're going to ask the big question, who's driving the bus in world's markets? Is it the ECB or the Fed? And here on Friday the 6th, we've had a massively huge U.S. nonfarm payrolls report, and we're seeing some wildly different reactions to it depending on which market is happening, because the huge 295,000 increase in non-farm payrolls continues to put pressure on the Fed to start raising interest rates as soon as mid-year. On the other hand, on Monday the 9th, we have the ECB kicking off their quantitative easing or asset purchase program, or money printing, or whatever we want to call it. But the point is, we've got a more hawkish Fed, a more dovish ECB moving forward, and this big divergence could have a significant impact on trading not only this week, but in the weeks to come. Particularly the highlight this week being the ECB kicking off their QE program, but the Fed meeting is not until the following week, a week from Wednesday on the 18th. So that's another big day for markets over the next couple of weeks. So we do expect to see quite a bit of active trading. The other development I'll talk to a little bit towards the end is that there's a number of announcements due out from China this week that could influence trading in Asia Pacific markets. But first, let's go back and look at U.S. and European indices. Today we're seeing a big divergence. We've had the DAX rally up to a new high. Meanwhile, we've got the Dow down almost 200 points at the time I'm speaking here, and we've got the S&P lower as well. So we are starting to see a divergence between equity markets, and this is related, of course, to the diverging central banks going forward. It was absolutely spectacular non-farm payrolls report today from the United States, and that certainly has had a big impact on trading in the U.S. today. Looking here at indices, we're starting to see a bit of a change of course too. We've had looking at the Germany 30, even though it's moving up to new highs, we're still seeing a fairly significant short position against it, which suggests that people are starting to get a little bit concerned that maybe this rally is getting a little bit ahead of itself. Maybe it's getting due for a correction. In particular, we've had a big increase today in short positions among top clients, which suggests that some people are starting to think that perhaps that's getting a little frothy. In between here, we look at the S&P and the US 30, and we can see again there's some indecision here among traders. They did not hit a new high and follow the DAX higher, and in fact the US markets have been rolling over and remaining stuck within their trading channels and starting to fall within those. So what do we see here? We still have positive in terms of number of clients, but in terms of position rally, we're seeing decidedly more on the short side. What that's telling us is that the people that are short are doing it with more conviction than the people that are long. The other thing we're seeing is here on the US 30, as the markets have started to sell off in the wake of the non-farm payrolls report. Look at that, 17% decrease in the short position. So actually, we have had some short covering today, and people actually starting to go long, likely people that are looking to buy the dip here. So we are seeing some indecision in the marketplace. Whereas here, that's the Dow. In the S&P 500, we're seeing that the clients have remained short. One thing I will say on the Dow, it is possible that some of this swing here may be related to the fact that just today Dow Jones has announced they're taking AT&T out of the Dow and they're putting Apple in. So we could be seeing some positioning in the US 30 on the upcoming change in composition in the market. So that's another factor that could be influencing trading over the next few days while that works itself out, and traders and particularly institutions rebalance their positions to reflect that. So I'm just going to take a look now at some of these index charts here. We'll start with the Germany 30, which here, as we can see, has shot up to a new high. However, it's dropped back and it's trading near its lows of the day. This could be a shooting star candle, and it could become a sign of near-term exhaustion here. This is still holding 11,500. The 428, 430 was the first breakout point, and then the next support would be in here. These two closes in and around 11,320 in the pullback. We are getting a bit of a negative RSI divergence here and an overbought situation, so could be due for a bit of a correction in the short term. Similarly, now if we go over and look at the US 30, we have a a bit of a rollover here, right? We did have a breakout, but the breakout wasn't really very enthusiastic. Yeah, we broke 18,100, got about a couple of hundred points, and then since then it's been rolling over. We've seen some weakening kick in during the week, and then look at this big bearish candle here today on Friday the 6th. Not only are we getting this breakdown and the break of the 18,000 round number, and on top of this we're seeing RSI break 50. That's a signal of momentum starting to turn downward in the US 30, and a significant increase in people starting to move against it. Next supports down here. This is the 50-day moving average around 17,810, and the 23 replacement percent retracement around 17,730 in a correction here. And I'll also show the S&P 500, which also has been starting to retreat here. It's broken the 2100 level. Same thing. It broke through 2100, couldn't get very much farther, struggled to hold above it. Now it broke it briefly a couple of times, and today we're really seeing it get hit. And similarly here, big breakdown on the RSIs down under 50, confirming a downturn in momentum. First supports this old resistance level here around 2065, and the 23% retracement in and around 2050. So there is some room for this to correct to the downside in the near term. Next thing I wanted to highlight, going back to this Fed and ECB divergence, is the impact on currency markets. We have seen the US dollar just absolutely take off and roll over everything today in its path. We've got gold has had a big breakdown. It's fallen down towards 1175, taking out 1200. US dollar CAD has gone up, not quite so much. It's gone up to around 126. The pound and the euro have been under pressure. Among paper currencies, the euro under the most pressure. Not a surprise. You've got the Fed going more hawkish, ECB going more dovish over the next, heading that way over the next couple of weeks, and you're seeing it really start to play out in the currency markets. What's interesting here, even on the breakdown below the below 110 and below 109 down to 108.50, we are seeing the short position against the euro dollar start to trim back. This suggests to me we're seeing some of the people that were short taking profits ahead of the weekend is what looks like it's going there, because the pound, on the other hand, is kind of split here, and we haven't seen much change. Still on the position value, the clients are net short on the pound, but the number of clients has increased on the long side. So what are we seeing is a larger number of people are starting to at least nibble away at long positions on the pound, even though so far the short sellers seem to have larger positions and perhaps more conviction. It does show, interestingly, that some people are looking to start to nibble away at this dip. Maybe we might see this happen a little more if it starts to get closer to the 150 support level. The looking at US dollar CAD popped up above 126, so that's the CAD weakening. And what are we seeing here actually is that the number of clients is actually moderately long, but on position value it's actually short. And we're actually seeing the short position among top clients has increased significantly today. That's suggesting that top clients don't necessarily believe this rally here. In terms of the CAD, there are reasons to think that CAD could strengthen, particularly with the Bank of Canada deciding not to cut interest rates and just going on hold at last week's meeting. So we are seeing some mixed sentiment here towards US dollar CAD. It's kind of been bouncing around between 124 and 126. We may see that kind of choppy trading continue over the next week or so. The main event for the loonie is on Friday. It's the Canadian jobs report. That may give a better indication of what's going on there in terms of how much has the oil price crash had an impact on employment in Canada. So we could see the loonie very active on Friday surrounding this announcement. The last client sentiment I wanted to look at here is gold. Gold has been hit pretty hard today, but we're seeing that a few people are going a little bit less long, but overall on balance, clients remain long on gold even with the sell-off that we've been seeing. And here's the battle we have is particularly we may see play out in gold over the next couple of weeks, because gold over the long term has tracked the ECB balance sheet up and down, and the ECB is about to kick off off their QE program that's supposed to drive up their balance sheet. All else being equal, we'd expect that to continue, gold to follow the ECB balance sheet higher. But what if it doesn't? Does that mean gold is starting to respond to the Fed once again? We're certainly seeing that here on Friday the 6th, where gold is getting hammered pretty solidly by the rally in the US dollars. So here's the big battle. Here's where we'll probably see it play out for dominance in the markets over the next week, and see who really is driving the bus. Gold will probably be the market that tells us. So just to run through a few charts here, I'll look on the currency side. We'll start with dollar CAD. Here we go. So as we see, we had topping formation happening, a descending triangle forming in dollar CAD. If we just adjust it, it kind of still is. It's showing it needs to get maybe above 126 and a quarter to really break this downtrend here. It has peaked above 126. As I said, support is in here around 124. The 50 has held here, so we do on the RSI, and it is kind of starting to tick up. So it does look like the upward momentum is building. If you do break out, next resistance 126.65. These highs here around 127.10, and then this is around 128 if it decides to move up to the top of this wider trading channel here. On the other hand, if we do see it come down, first support is here in and around 125 even, a round number, and some previous closes. Looking now at euro dollar, which has been under quite a bit of pressure today. We're seeing it did break 110 and has just been absolutely slammed right down to 108.50. This was an old 111 to about 115 trading channel. That actually measures down to 107. There was a 111 to 113 range as well, measures down to about 109. That was kind of broken. RSI is getting really oversold, so could we pop back and see this revisit this 110 round number that was broken? It's certainly possible. And as we bring this down now, we see the 23% return. I mean, there's still quite a ways to go up to that. So maybe your first support might be this other old low here in and around 111. So yeah, you might get a trading bounce in the euro, but today was a pretty substantial breakdown all the same, and confirming that it looks like there's a new down leg underway for euro dollar. Let's take a look now at cable. And cable also been hit pretty hard today, taken out 152. It's now looking like it could retest the bottom end of this channel here. Support in the 149.75 to 150 range near the big round number. We're seeing RSI is telling us that downward pressure is still increasing against sterling, but so we could see a retest of this support zone in the near term. Also, I'll take a look at dollar yen and euro yen. Briefly here. Here's dollar yen. And we're seeing here that it has finally broken out above 120.50 to complete an ascending triangle, signaling that it's got a good chance of taking a run here at 121.75 to 122, this previous resistance, which dates back to December. RSI also confirming that upward momentum is building in dollar yen. But what's interesting is we'll take a look and see if this divergence is still here. There was a divergence between dollar yen lately and euro yen. And if we look at euro yen, it's actually been going the other way. So, as we look at it here, it rolled over, it completed a descending triangle, broke down, it retested this 133.50 as new resistance, and kaboom, we're seeing it go down again. Similarly, we're seeing this roll over and continue to drive downward. So we're seeing the yen, like gold, kind of getting caught in the middle here between the US and the euro, where Japan is outperforming the euro, but it's underperforming the dollar. So again, a market that we want to be keeping an eye on over the next week or so to see how does this play out and who's really driving the bus for world market. Another crucible of this decision. I did want to highlight briefly some of our Asia-Pacific markets as well. As I noted, there's a number of Chinese data points coming out during the early part of this week. We get trade balance, we get inflation, and for the first time in a couple of months, we get retail sales and industrial production back this month as well. So we could see quite a bit of action in other Asia Pacific markets as this data comes out, particularly in the first half of the week. We also have an Australia employment report this week, which also could attract quite a bit of attention. People looking to see what has the decline in resource prices done for Australian employment, similar to people looking at Canada as well. So we have Australia midweek, Canada at the end of the week. We'll start with the currencies here. I did the yen pairs, so I'll look at Aussie dollar and Kiwi dollar briefly here. We have on Aussie dollar. There we go. We had been seeing some base building form. We had an ascending triangle. This has been broken today by the strength of this is US dollar strength more than Aussie weakness. It is rolling down a little bit. Initial support here about 77, more about 76.15. This is about a 76.15 to 79.15 trading channel for the Aussie dollar. And we'll just take a quick look at the Kiwi dollar as well. Okay, so here again, similarly, it's been range bound between about 72 and about 76. It's just dipped below 74 back into the lower half, broke this trend support line here, retested as resistance, and then kaboom, it's down again. Similarly, RSI has broken decidedly back under 50, so it does look like we're into a downturn here within this trading channel. First support about 73, second support about 72. And we have an RBNZ meeting this week, so that's another reason we could see some interest in the Kiwi dollar this week. That is on Thursday morning local time, just before the Australia employment report. So late Wednesday afternoon in North America, early Thursday in Asia Pacific, we could see some action in the Kiwi dollar. The RBNZ is not expected to cut rates, although certainly they have the room to do so, with every other major central bank around the world having cut rates already, except for the Fed and the Bank of England. Most people have gone stimulative in the last couple of months. The RBNZ raised interest rates 4 times last year for a total of 1%, so they certainly have room to cut rates if they want to do so, although the street is not expecting it at this time. But if you get a surprise, you could get a surprise cut, though it does seem unlikely right now. I'll just highlight quickly a couple of indices here. We'll look at the Hang Seng and Australia and Japan. So starting first with the Hong Kong, what are we seeing here? There's been some concern growing about China lately, and we're seeing this play out in the Hong Kong index because we had a number of series of rate cuts from the People's Bank of China in pretty rapid succession. The first one sounded great, even the second one, but then once you start getting into the third and the fourth, it's sitting back and going, well, if they've suddenly gone aggressively to stimulus, what's wrong with their economy? How bad is it? Is it worse than people think? The government last week just cut their growth forecast from 7.5 to around 7. Is it lower? I mean, is the PBOC scrambling to even get to the 7? Those are the kind of questions people will be looking to try and figure out from the data out of China as it comes this week. Hong Kong here, we had a pretty good rally off the December low till early February. This is kind of a not perfect, but a bit of a head and shoulders top here, and it's broken. And it took out 24,300, back testing 24,000, and the next support is in and around these lows near about 23,700, 23,700 and change. So there is still some potential room for the downside, although the one thing we do have, RSI is getting a little bit oversold, so perhaps we could see support come in around 24,000. We'll see. The Australian market is also has been weakening, or starting to. It finally did make it up to the 6,000 level, and it did actually trade up there, very briefly peaked up there, but now we're seeing it start, and then since then, as often happens following round number tests, we're seeing it start to drift back. Now this is a bit of a normal correction, but note that resistance has now come down to 5,900. We do have a downward pointing candle today, and we are seeing that RSI momentum showing this upside momentum's weakening here, although we haven't turned downward yet. But first supports probably in and around here, say around 58.45, and then 5,800, and this is 57.90, a 23% retracement of the rally up off the October low, or really the double bottom here. And finally, we'll look at Japan. Here we go. And it's had a pretty good run here. Another one that peaked up. We may have had a bull trap peak here just above the 19,000 level. So, and with other markets turning lower, the Nikkei may also be vulnerable to a correction. First support here, the 10-day average around 18,760, 23% retracement 18,435. So there is possibly some room for a bit of a pullback in this one as well. And I would be remiss without going a week without talking about crude oil. So we'll bring up the WTI chart here very briefly to finish up. And basically what we're seeing is after the big sell-off of the last few months, it continues to level off. Current trading range is around 47.50. First resistance around 52. Second resistance around 54. And we're seeing now the RSI swinging back and forth between 40 and 60, indicates sideways momentum. It looks like we're heading into some kind of an L bottom that could last for a while, where we've come down and now it goes sideways. This broader channel here is about 43 to about 55. We could see crude oil remain choppy through that, and particularly it can be influenced by swings in the US dollar as well, since crude oil is priced in US dollars. So that wraps up this week. Next week has a potential to also be a really busy week for markets, with the Fed meeting, FOMC member projections, and a press conference with Chair Yellen. So the middle of March still looking to be a very active time for trading.